Welcome back to another exciting episode of Finance Explained in 5. Today, we've got a real treat for you. We're diving deep into the world of Raytheon Technologies, ticker symbol RTX, and we've got some fantastic insights to share. So, grab your notepad and let's get started. Alright, let's kick things off with a look at Raytheon Technologies' price-to-earnings ratio, or PE ratio. The current trailing 12 months PE for RTX stands at 22.55. Now, that might seem a bit high, but over the last 5 years, the average PE has been 18.78, indicating some potential stability in valuation. Looking ahead, the forward PE, which gives us a glimpse of the future, is at 15.24. This could suggest that the market has a positive outlook on RTX's earnings. But hold on, we're not done yet. Let's talk about the price-to-earnings to growth ratio, or PG ratio. RTX's PG ratio is 2.09, indicating that investors might be paying a bit more for the growth prospects of this company. Now, moving on to profitability metrics. Raytheon Technologies has a return on equity of 7.7% and a return on assets of 3.5%. These figures give us an idea of how efficiently the company is utilizing its resources to generate profits. There are some points of improvement in this area for Raytheon. Speaking of profits, RTX has an earnings per share of $3.77. What's even more exciting is the EPS growth forecast for the next 5 years, which stands at a whopping 10.8%. That's a promising outlook for potential investors. Now, let's talk about dividends. RTX offers a dividend yield of 2.77%, and over the last 10 years, they've seen a dividend growth rate of 5.41% on a compound annual basis. This is great news for income-oriented investors, as it has been paying dividends for over 30 years, nearly 30 of which have been steady dividend growth. Impressive, right? Moving on to margins, Raytheon Technologies boasts an 8.6% operating margin and a 7.9% profit margin. These numbers indicate a healthy level of efficiency in their operations. Now, let's take a step back and look at the company's financial performance over the past 8 years. Revenue has been pretty steady, ranging between $50 and $70 billion. Earnings have also remained constant, around $5 billion, except for 2020, when there was a loss, which, as you might remember, was a challenging year for many companies due to the global pandemic. This stability has been mirrored in RTX's stock price, with the last 5 years showing a price similar to the current one. Debt-conscious investors will be pleased to know that RTX has a debt-to-equity ratio of 0.49, indicating a manageable level of debt. The long-term debt-to-equity ratio is even lower at 0.45, indicating good management of financial health. Now, let's check out the stock's recent performance. Over the last 52 weeks, RTX has seen an average price return of -1.99%. Keep in mind that past performance doesn't guarantee future results. So, where does this leave us in terms of valuation? Analysts have their eyes on RTX, with an average price target of $100.93 for the next 12 months, compared to the current price of $85.05. That represents an upside potential of 18.63%. And if you asked me, I believe the fair value of RTX is around $92.48, slightly lower than analysts' predictions but still above the current price. This suggests that the stock may be undervalued. And there you have it, folks. A comprehensive breakdown of Raytheon Technologies' financial metrics and a glimpse into its potential. Remember, investing always carries risks, so make sure to do your own research and consider your own financial goals. Thanks for tuning in to Finance Explained in 5. Don't forget to like, subscribe, and hit that notification bell so you never miss another financial deep dive. Until next time, stay informed and invest wisely.